and welcome everyone. I'm really excited. Officially the Bronx Chamber's first webinar, but the God knows how many in partnership with Mike Brady and the Bronx Coalition. I'm going to keep my introduction short because we have a lot of amazing information. I want to introduce first our panelists. We have Lucy McMillan from Arnold Porter, who has been our right hand during this whole process with the work from Arnold Porter. We have Jim Joseph, Arturo Caraballo. Sorry, I told you about my Spanish. Cheryl Gitzlitz from Arnold Porter. They'll be doing the presentation. We also have with us Ralph Bambaca from TD Bank. Of course, we have Michael Brady and Jennifer Tausek, who head our Bronx Coalition along with our 7 businesses. Marlene Centrone will be from the Bronx Overall Economic Development Corporation, will be doing a presentation also, and I thank her for joining us. And our super special guest, Commissioner Doris from Small Business Services, has graciously agreed to join us. We also want to thank the New York Yankees and Univision, who have been incredible partners during this whole process, putting together an opportunity for a larger outreach for our borough, which has been super important. Univision has run stories nationally across New York and really committed to helping the Bronx and reaching corridors that we may not have the ability to. The leadership of the Yankees has allowed us to put together the Bronx Means Business .org, which is a website that we recommend everybody to go on to, that provides a one-stop shop for everything that's going on in the Bronx and all the information. The presentation being done today will also be posted there, and we will be sharing it out with all the Bronx Coalition members. With that, I hope I didn't miss anybody. With that, I really would like to say good morning to Commissioner Janelle Doris, our brand new commissioner for SBS, to greet our group. And thank you, Commissioner, for joining us this morning.
Thank you, Lisa. Brand new is such an interesting term. It feels like we've been at this for a while. Thank you, Lisa. You're doing such great work, and you're such a great partner. I think from the minute I became commissioner and made that first call to you, I just wanted you to know that our partnership has been really, I think, supportive of the Bronx and the businesses in the Bronx, and being a part of this coalition is really, really important, and to me, and making sure the Bronx gets its fair share. And to all the others that are on the Bronx Coalition, and of course, a lot of the partners you mentioned that we work with also, you know, and for particularly TD Bank and others, we just really want to thank you guys, everyone, for joining. And if I miss anyone, I'm sorry, but certainly thank you all partners for making this happen. You know, a huge thank you to the Bronx Coalition, who make the impossible possible for the Bronx, we like to say, and certainly on our walk, Lisa, when I said the Bronx is coming back, I really meant that when we took that corridor walk and met with those businesses and was able to speak specifically to some of the challenges that they may have. We really believe the Bronx is coming back, and we want to be a part of that. And I think our commitment to do so, you know, has been shown, but we need to do more, obviously, and that's why we're here this morning. So really, by working with SBS through the recovery efforts, that coalition, you, Lisa, and Mike, and everyone else, you know, we've had you on our advisory council, the Mayor's Advisory Council. You've been a great partner there, partner with us as PPE distributors, and supporting us with our efforts to process the small business emergency grants, which we thank you all for helping us with that, to get it to those businesses as quickly as possible who are impacted by the looting and vandalism due to civic unrest. These are only a few small, examples of how our partnership has been, you know, valued over the time of my tenure here in particular, and SBS is here to continue that support. and wanted you to know that. We're here to make sure that, as we reopen and we move into the different phases, that our office is here ready to support you. One thing I do want to talk about quickly before I leave is our open restaurants program. As you know, we want to encourage as many restaurants to participate in this program as possible. We want to make sure that restaurants sign up who are eligible. It's a 3-step process, very easy. You can get immediately approval to sign up for this program. It's a self-certification process that really takes about 5 minutes or so to do it. And we want to make sure all the restaurants who are able to apply can apply. You can do that at nyc.gov, open restaurants, and all the information is there. To that end, we are committed, as you know, to connecting businesses to resources that really support with constantly changing state guidelines as business, think about reopening. We've launched our hotline, which we received over 19,000 calls to that hotline already. It's, SBS, 888-SBS-4-NYC. You can call if you're a small business. You can call our hotline and get some information about reopening guidance or financial assistance or PPE if needed. Of course, the chamber and all our bids have PPE supplies. We're giving out another $2.5 million to the city. We've already given out $5 million plus, and so we'll continue to do that to get those supplies over to our small businesses. Also, the industry-specific guides regarding city and state guidelines and regulations are available in multiple languages and available on our website at nyc.gov/business. Sure, our team will put all this in the chat box so you can have it. And we do an interagency resource fair. And I think this is one of our big hits. We bring all of various agencies to the table, and we're able to speak to you specifically about your issue with those particular agencies, and you can speak to them and get information directly from those agencies. Again, all that information is at our website, nyc.gov/business. And then we also, continue to work with the 80 community partners, as I mentioned, to make sure that you have all the necessary resources that you need. And one of them, of course, is the Bronx Chamber and also our coalition of bids. So look, I want to just thank Lisa really for the invitation. I know this is, it feels like we've been on many of these Zooms together and really trying to help our small businesses get back. I want to thank you for the invitation to your first official one. And I wanted to make sure that I'm here. Unfortunately, I have to run away back to a meeting. I've pushed back to join this particular call, but just wanted to say, look, we're here and we're committed to you. And we want to make sure that the Bronx come back stronger and our small business, really persevere and get what they need. So thank you guys so much for having me on. Thank you, Commissioner.
I appreciate your kind words, and you have been a true partner to us. And that's an understatement. So I really, really thank you for that. And your compliments to the Bronx Coalition has really been amazing because they deserve a huge applause. And Mike Brady has been our spearheading on that. He also chairs our legislative committee. So it's wonderful. And I'll turn it over to him. And Commissioner, thank you for taking the time for us this morning.
Thank you guys so much. Thank you, Lisa, Mike. Thank you guys. Take care, everybody.
Bye-bye. Mike.
Thank you, Lisa, and thank you to Commissioner Doris and the entire team at SBS. We're grateful for your leadership and partnership. The Bronx Business Organization Coalition started the second week of the COVID-19 pandemic and has really yielded great results for the borough and has maximized resources and impact for the entire Bronx. From packaging over 1,300 Paycheck Protection Program applications to working through to establish a small business grant program. The coalition has really been on the ground providing services to our most vulnerable businesses. And that could not be done without a strong partnership with the Bronx Chamber of Commerce, the Bronx Overall Economic Development Corporation, the Bronx Business Improvement District Network, the New York City Bid Association, and so many of our other partners from throughout the borough, including and New York State, including Empire State Development and the Business Initiative Corporation of New York, as well as Bach Network. So very thankful to all of those partners for joining us and helping, have a united front of services for the borough. A couple things for the businesses that are on the Zoom right now. In the chat box, there is a link to a small business grant application. This is the second cycle for small business grant funds of up to $25,000 for Bronx businesses with 20 employees or fewer. This grant funding comes from the Bronx Community Relief Effort and is facilitated by the group of business leaders in the Bronx Business Organization Coalition. So I would encourage you to apply. The application is available in English, Spanish, and French. Additionally, we are known for hosting a ton of capacity building workshops and trainings. In addition to this one that we're super grateful for the relationship with Arnold Porter and the New York Yankees. We have another one tomorrow morning at 9 a.m., which is a deep dive into the Paycheck Protection Program, and another session scheduled for next week on business interruption insurance and how that impacts your small business. With that being said, I don't want to go over time. I do want to thank the entire team for all of their hard work, especially Salam from the 3rd Avenue BID, who has been the tech guru. I don't think I can give Salam enough praise. So thank you again, Lisa, and thank you to all of our partners for making sessions like these possible.
Thank you, Mike. And I guess I should thank my staff, right? They're all going to quit on me. Thank you for putting me on the spot. And I'm going to turn it over because this is really turning it over to our experts. And I will introduce to you the woman who has really held our hand through this process, and graciously her and the company have represented us so well. And I thank you. Lucy, the floor is yours, and to introduce your team.
Thank you, Lisa, and good morning, everybody. My name is Lucy McMillan. I'm an attorney and pro bono counsel in the New York office of Arnold Porter. Arnold Porter is an international law firm. We have offices in New York and Washington, D.C., and across the country and globally. We are very, very happy and honored to be partnering with Lisa and Mike and the Chamber and the Yankees and Univision and all of these wonderful organizations that are coming together to put on this program, on the Paycheck Protection Program. We are working on, we have a program where we've been counseling small businesses on these areas. We've also been counseling individuals on unemployment issues. And I would like to introduce my colleagues who are the true experts here and will be presenting today's program. Jim Joseph, who is a partner in our Washington office, Cheryl Gitlitz, who's a senior counsel in our New York office, and Arturo Caraballo, who's a counsel in our Washington office. Jim, Cheryl, and Arturo counsel companies and tax-exempt entities, financial institutions on a broad array of financial and transactional items, and they are well steeped in the ins and outs of the PPP. So we thank you very much for having us, and I am going to turn it over to Cheryl to start the presentation.
Okay. Good morning, everyone, and thank you for having us. We're going to speak today predominantly on the Paycheck Protection Program's loan forgiveness process, including the new application for forgiveness that were published. I believe last week or the week before. It's hard to remember, but I'm just going to touch briefly on PPP loans themselves and just some brief updates on the program, including one that happened late last night. So I'm just going to start into it. So we're going to discuss basically 3 things: Paycheck Protection Program overview, legislative changes to the PPP, and loan forgiveness. The PPP was part of the CARES Act that was enacted on March 27th. The PPP program, Paycheck Protection Program, is designed and intended, excuse me, to have employers maintain their payroll and to get people cash, their paycheck as soon as possible under the circumstances. It authorizes up to $10 million in loans at a very low interest rate to pay for operating costs and payroll. The CARES Act provides that these loans are fully guaranteed by the federal government. Originally, the amount of the PPP loan program's funds were about, I think, 359, and then it was increased to $670 billion. As of Monday, I believe $130 billion is still available for PPP loans. Loans are available on a first-come, first-served basis. And I'm going to mention in a moment, there's a lot of pressure on Congress, and there has been since the act was passed, to make changes and approve different parts of it, including extending what was the deadline for PPP loan applications, which was yesterday. And late last night, the Senate passed an extension to August 8th, and it's going to go to the House and then to the President for signature. So that's great news for all, because $130 billion is available, and it's still intended to get into the hands of employers to pay their payroll and maintain their payroll in these difficult times. You can receive these loans from authorized lenders, including banks have been approved that were not previously approved for providing 7A loans. There was already, as you probably know, ability to borrow SBA loans under 7A, and that had been limited to certain 7A lenders, but that has since been expanded. The Paycheck Protection Program and the Healthcare Enhancement Act, which was another act created to set asides for loans, including $30 billion in loans that are made by insured smaller depository institutions and credit unions. There's also a set aside of $30 billion for loans to be made by community service financial institutions, such as community development financial institutions, minority financing institutions, and certified development company microloan intermediary and federal and state credit unions. Tied to smaller institutions, not just the larger banks. Since the act was originally enacted on March 27th, there was, as I mentioned, have been some changes, including pursuant to the Paycheck Protection Program Flexibility Act that was enacted on June 5th. One of the things that the Flexibility Act changed was extending the maturity of PPP loans. Originally had been set at 2 years. It is now set at 5 years for loans made after June 5th. Loans that were made before June 5th are still subject to the 2-year maturity. However, if you have one of those loans, you can try and negotiate with your lender to extend the maturity. Another change, which was critically important given the situation in terms of the phased reopenings, is the expansion of the period within which PPP loan proceeds had to be expended in order to be eligible for forgiveness. Originally, that period was 8 weeks long, meaning that if you borrowed the loan, the day you received the funds started a clock requiring you to spend the loan on certain limited things, payroll costs and other costs such as mortgage interest and rent and utilities. But in order to get 100% loan forgiveness, you had to expend the funds within 8 weeks. It is now 24 weeks. 8 weeks was just too short a period, as you can imagine, especially for businesses that weren't able to open within the 8 weeks, or weren't able to gear up and pay all of their employees within the 8-week period. So that was a great change. Another change was increasing the percentage of non-payroll costs that were eligible for forgiveness. Originally, it had been set at 25% and has now been increased to 40%. Again, taking into account that certain businesses couldn't get up and running fully and have their full staff within the short period of time, so that this allows it to be 60% on payroll and 40% on other costs. There are certain safe harbors that my colleagues Jim and Arturo will mention regarding safe harbors for rehiring back full-time employees and restoring wages. The loan forgiveness amount is subject to reduction based on certain factors, but there was a safe harbor enacted that allowed you to rehire your staff and return their wages. Has been extended from June 30th to December 31. And then there were certain exceptions to these rules for reducing loan forgiveness amounts related to the inability to rehire employees that were employed on February 15th, or an inability to hire similarly qualified employees, or the inability to return to your pre-pandemic level of business due to COVID-19 restrictions, such as you can't have more than 50% of your restaurant, your tables available to diners or hair salons or similar businesses that won't be able to get back to pre-pandemic levels of business simply because they're following the requirements of both the state and federal government. They've also extended the payment deferral period. Originally, the payment of principal and interest had been deferred for 6 months. It has now been extended for a period up to 10 months after the last day of the covered period. And the Flexibility Act also changed the rules regarding deferral of employer payroll tax. Originally, employers who did not get loan forgiveness were able to defer employer payroll taxes for 2020 into 2021, 50%, and then the remainder in 2022. Now, even loans that have been forgiven, employers who have loans that have been forgiven, are also eligible for that deferral. So now I'm going to turn it over to Jim to talk about loan forgiveness, which I think is critically important and trying to maximize the amount. So Jim, take it away.
Thanks, Cheryl. As Cheryl mentioned, the PPP is part of the CARES Act, and the CARES Act was the largest stimulus package in American history. And you can tell from the numbers that Cheryl was mentioning. What makes the PPP so attractive to borrowers is that you have the ability to have some or all of the PPP loan and interest forgiven. And this basically turns the loan into a grant that does not need to be repaid. The amount forgiven is a complicated formula, so bear with me as I go through it. So the amount forgiven equals the permissible expenses that you incur during your covered period. So that's the basic. The covered period, as Cheryl mentioned, was extended from 8 weeks to 24 weeks. And the period is measured from the date you receive your first loan payment or proceeds from the bank, or you can elect to have it start the first payroll period following the receipt of the loan. Now, sort of one point, if you received your loan before June 5th, then you can elect to have the old 8-week period apply rather than the 24-week. And this is a useful thing for businesses that were able to hire some people early on and kept people on during the pandemic, and did that during their 8-week period, but then had to subsequently lay people off. It may be useful to look at, would you get more loan forgiveness using the 8-week period versus the 24-week? So, that being said, you look at your covered period, and then you have to look at what are your permissible expenditures. And there are 4 categories of permissible expenditures. Payroll costs, which I'll go into detail on in a minute, interest on a mortgage that you had before this all started, rent payments that you're making, and your utility expenses. And so what they were getting at was payroll, obviously from the name of the act, they want to keep your workers employed and they're getting a paycheck, so they're not going on unemployment. And then they want to help you address other fixed expenses. Now, the definition of payroll costs is gross compensation. So that means salary, wages, commissions. Basically, it's anything that you would be putting on the employee's W-2. And this would include amounts, because it's gross compensation, it includes any amount that you withheld from the employee's salary to cover income taxes, or the employee's portion of FICA, or the employee's FUTA payments. It also includes the contributions that you make on behalf of employees to your group health care or to their retirement contributions. So all of those things can be included in payroll. What is excluded is any compensation you paid to an employee over $100,000. So if someone made $105,000 on an annual basis, you would only be able to include the pro rata portion of that incurred during the 24 weeks or the 8 weeks up to $100,000, not above. You also can't include any of the employer's portion of FICA, so what you pay as part of the FICA. You also you cannot include anything that you paid to independent contractors. So that's important to keep in mind. Also, as Cheryl mentioned, your payroll costs have to equal 60% of the total forgiveness. Originally, it was 75%, and that was high for people to be able to satisfy. So in the Flexibility Act, which passed recently in early June, Congress changed it to 60%. So what that means, if you incurred $100 in permissible expenses during your covered period, $60 of that has to be payroll costs. Now, let's say that you incurred $100 in permissible expenses, but only $54 were payroll. Then under that circumstances, your total forgiveness would be $90, because to make the math easy, 90 times 60% of 90 is 54. So if you didn't hit, kind of 60% of your total being payroll costs, you still get forgiveness, it just will be reduced. So Cheryl, if we can go to the next slide. As Cheryl mentioned, the loan forgiveness forms have come out. There's 2 forms. This is the long form, and then we'll show you in a minute, there's an easy form. The forms are actually pretty good. I urge you to read the instructions. They walk you through the calculation and really help sort of you understand these rules in a practical way. And then a number of lending institutions and there's a number of online calculators for the loan forgiveness. So that's something that I urge you to look at. And whether you're using the long form or the short form, you're going to have to include a lot of documents along with your loan forgiveness, application. You're going to have to give bank statements or documentation from your payroll provider. If you use something like Paychecks or some a payroll provider, you're going to have to give reports or documents showing the amount that you paid in payroll. You're going to have to show your payroll tax forms, and then you're also going to need to show canceled checks or transfers out of your bank account for things like your employer contribution to retirement plans or healthcare. If we can go to the next one, the easy form is, hopefully hearing my dog going crazy in the background. Sorry about that. The easy form is available if you do not have any loan reduction, which I'll go into in a minute. And if you don't have a PPP loan forgiveness that is subject to a reduction amount, then you can use the easy form. So the next slide is once you calculate the loan forgiveness, they require that you reduce your loan forgiveness in a few different circumstances. First of all, if you got what's an EIDL grant, which is called an economic injury disaster loan grant, which businesses could have applied for and get a $10,000 grant from the federal government, that $10,000 is subtracted from your loan forgiveness off the top. And then there are two other very complicated formulas for loan reduction. First is you reduce your loan forgiveness by the proportional amount of the drop of full-time employee headcount that you had during the covered period, which is that 24 or 8-week period, versus a period that you can elect between a few months in 2019 or the first 2 months of 2020. And how this works is you basically add up the hours that all of your employees worked using 40 hours as the baseline, and you do that for the period, the look back period in 2019 or early 2020, and compare it to the full-time equivalent headcount that you have during the covered period. And if that dropped, then you do a proportional reduction. So let's say you had to lay off 40% of your workforce because of COVID. You know, your restaurant couldn't open fully, so you're only able to bring back a portion of people. That would mean that you would have to reduce your loan forgiveness by 40%. And there's a safe harbor if you rehire people, which Arturo will go through. And then the second loan forgiveness is a dollar-for-dollar reduction if you had to reduce the compensation of your workers. So this is, you look at what employees made sort of during the first 3 months of 2020, so January, February, March, and then you compare how much the workers made during the 24-week period. And so that you're not double counting the workers who were laid off, you only look at the people you paid during the first quarter and the people you paid during your covered period, and then you compare whether you reduce their salary. And they give you a 25% buffer. So you have to have reduced the salary more than 25% for this forgiveness to kick in, or for this reduction to kick in. And this is a dollar-for-dollar reduction. So, you know, if you basically had to do a 40% across the board pay cut for people to be able to bring people back and get your head count up to what it was before, then you will still get this reduction based on a dollar-for-dollar amount. And with, again, another safe harbor that Arturo will go through. So I turn it over to Arturo.
Oh, okay, thanks, Jim. So Jim, I think, did a good job laying out the loan forgiveness calculation, which is, I think, the first thing you need to do, and then you figure out whether you need to reduce that loan forgiveness amount either by virtue of this sort of FTE or full-time equivalency based reduction calculation or the salary and wage reduction calculation. I'm going to talk about a couple of different provisions that are available under the SBA's guidance that help you really minimize or avoid altogether these reduction calculations. And we'll start first with the exceptions. The exceptions that exist under the SBA guidance really relate to the loan forgiveness reduction calculation that is based on your FTE count. And there are a few of these that are available. And what these exceptions allow you to do is for employees who sort of fall into these categories that we're going to describe, you can disregard those employees for purposes of your FTE-based reduction. And so the first of these is something that came out in the regulations that followed from the passage of the Flexibility Act. And so it's a situation where a borrower has made a good faith written offer to rehire employees who were employed on February 15th of 2020. So it's the circumstance that Jim described where you have a reduction in your headcount as a result of the pandemic. And presumably those offers to rehire those employees have been rejected. And then if the borrower is able to also demonstrate that it could not hire similarly qualified employees for those unfilled positions before December 31, 2020, then those employees that were laid off and could not be refilled, or the positions for which could not be refilled, you simply disregard those for purposes of this FTE reduction calculation. Similarly, for employees who were not laid off but whose hours were reduced as a result of the pandemic, if the borrower can demonstrate that it has made a good faith written offer to restore that employee's hours during the covered period or the alternative covered period, either the 8-week period or the 24-week period that we've talked about previously, and the employee has rejected the offer to have his or her hours restored, then again, you can disregard the reduction in that employee's hours for purposes of this sort of FTE-based reduction calculation. And then the last one of these exceptions is, any employee who, again, during the 8-week or the 24-week covered period, whichever one the borrower has sort of elected to use, if they were fired for cause, if they voluntarily resigned, or if they voluntarily requested that their hours be reduced, then those employees or the hours reductions for those employees can again be disregarded for purposes of this calculation. So this is really, these exceptions really allow you to sort of minimize the amount of the reduction that you would get in your loan forgiveness. Cheryl, can we jump to the next slide, which I think is 11. Yeah, there we go. Okay. So we talked about the exceptions. There are also a few safe harbors that are available, and these safe harbors, if you qualify for them, really enable you to sort of avoid the loan forgiveness calculation altogether. And there are a couple of safe harbors that relate to the FTE-based reduction that we talked about, and there's another safe harbor that relates to sort of the salary and hourly wage reduction calculation that we talked about. And so the first of the FTE-based safe harbors is as follows. A borrower is exempt from the loan forgiveness reduction calculation, again, based on FTE count, if there was a reduction in the FTE count for that borrower during the period from February 15th of 2020 to April 26th of 2020, and then the borrower restores its FTE employee levels by December 31, 2020 to the FTE employee level that it had during the pay period that included February 15th of 2020. So in essence, if by December 31 of this year, you bring back your FTE level to the level it was at around February 15th or in that pay period, then you fall in this safe harbor and you don't need to do a loan forgiveness reduction calculation at all based on the folks that you had laid off, again, during this February 15th to April 26th period. The next one of these is something that was new that came out in the Flexibility Act that was passed on June 5th. And this is, again, another safe harbor. And what it provides is that if a borrower in good faith can document that it was unable to operate between February 15th of 2020 and the end of the covered period, again, it's either the 8-week or the 24-week, whichever you select, if it can demonstrate that it was not able to get back to the same level of business activity that it was operating at before February 15th of 2020, and that is as a result of legal requirements or guidance that's been issued by state or local governments, and between March 1st of this year and December 31 of this year, and that guide is sort of in response to COVID-19 and relates to, sanitation, worker, customer safety, social distancing kinds of things that have been issued by either the Department of Health and Human Services or the CDC or OSHA. Then again, all within this safe harbor, you simply don't have to do the loan forgiveness reduction calculation that's based on evidence. And then the last of the safe harbors relates to reductions in salaries and or wages, and like the FTE count, first FTE count safe harbor, if you restore salaries and wage levels for your employees on or before December 31 of 2020, and you bring them back up to levels that they were at on February 15th of 2020, then you fall within the safe harbor, and you don't need to do a loan forgiveness reduction calculation that's based on reductions in salary and wages. So those, again, are ways that you can either minimize or avoid the loan forgiveness reduction calculations that Jim talked about. Okay, so very quickly on use of proceeds. Jim mentioned that for purposes of loan forgiveness, you need, and Cheryl mentioned as well, that you need to use 60% of the loan proceeds for payroll costs, and the remaining 40% can be used on the other allowable operating expenses like mortgage interest, rent, and utilities. We have gotten a lot of questions from clients about, whether this really means that you need to use the entire loan proceeds using this 60-40 split, or whether it means that your loan forgiveness will only be allowable to the extent you use the proceeds 60-40. And I think the guidance is sort of all over the place on this. And some places it talks about the 60-40 split being applicable to loan forgiveness. In other places, it talks about the 60-40 split being applicable to the entire loan proceeds. And so what we have advised clients really is that they should endeavor to use all of the loan proceeds applying this 60-40 split between payroll and non-payroll costs. So just to give you an example, let's say you got a $150,000 loan and you have a 24-week covered period. Let's say within that 24-week period, you were able to spend $100,000 on allowable costs. And let's just say that you spent $60,000 on payroll costs and you spent $40,000 on non-payroll costs. You would apply for loan forgiveness for the entire $100,000 based on that 60-40 split that you were able to accomplish during the 24-week period. But then the question becomes, how do I need to use the remaining $50,000 that's left? And our answer is that out of an abundance of caution, we would say that you should use that remaining $50,000, applying that same 60% applicable to payroll costs and 40% applicable to non-payroll costs, so that no one can ever say that you ran afoul of the SBA's rules on this. So that's just a little bit on use of proceeds and loan forgiveness. There is a tax issue, and I might ask Jim to give us some of his thoughts on this, but the issue is really the following. The CARES Act provides expressly that the amount of any loan forgiveness that you get under the program is not to be included in your taxable income as you know, discharge of indebtedness income, which is ordinarily it would be. And so that's clear in the CARES Act. And so PPP loans that have been forgiven are not intended to be included, again, in your taxable income for 2020. The IRS, however, issued a notice, it's notice 2020-32, in which it said that that's fine, the loan forgiveness portion won't be included in your taxable income. However, any expenses that you incurred that resulted in loan forgiveness that might have otherwise been deductible business expenses for you cannot be deducted on your tax return for 2020. And they did this in order to avoid this sort of double tax, you know, what they interpreted as a double tax benefit to the loan forgiveness feature of the PPP loans. And you know, certain members of Congress have said, you know, that's not really what was intended by the CARES Act. We didn't intend to give a benefit in the CARES Act only to have the IRS take it away in this notice 2020-32. And so we may see some you know, response from Congress on this. Jim, you're the tax guy here. What do you on this?
The only thing I'll add is that we had hoped that Congress would have reversed the IRS decision in the Flexibility Act, and they did not. And then in the extension that was passed last night by the Senate, I haven't heard that it was included in that bill either. So even though some members have objected, you know, we're not seeing them actually move on this. So as of now, expenses that you use for forgiveness, you can't deduct on your taxes. So it makes it a little less valuable.
Yeah. Okay. Jim touched a little bit on the documents that you need for loan forgiveness. I won't go into a whole lot of detail on it, but I think just I'll leave you with a couple of thoughts. You know, there are certain documents that you will need to provide to your lender when you apply for loan forgiveness. One of those obviously is the completed loan forgiveness application. And then there are a number of other documents which are set forth in this slide. And these will need to be, again, submitted in writing to your lender as part of the application process. There are other documents that don't need to be submitted to the lender. This is a lot of sort of the supporting documentation on your FTE reduction calculations, or your salary and hourly wage reduction calculations, and whether you fall into the safe harbors, and other sort of worksheets that are attached to the loan forgiveness application. These documents you need to prepare and you need to retain for 6 years after either the loan is forgiven or it's repaid in full. And so you know, you just need to sort of pay attention to what it is that you need to actually submit to your lender, and what it is that you need to just keep in your files for 6 years. And then I think the last slide we have here relates to some issues that I think we've already covered. One of which is this extension of the deadline for receiving PPP loans which had expired last night or under the original CARES Act. That's now been extended to August 8th by the Senate. I think there's an expectation that the House will act on it perhaps today or maybe tomorrow. And so, you know, we hope that deadline will, or the extension of the deadline will actually take effect, because there's over $130 billion worth of PPP money that's still available. And if the deadline is not extended, it will just sort of go to waste. The other, I think, important thing that Congress has been considering in the last couple of weeks is the possibility of allowing certain borrowers to apply for a second PPP loan. And this, you know, I think this is a function of an acknowledgement that there's money that's still available, that you know, the original 8-week period was probably not long enough, and perhaps even this 24-week period might not be long enough for certain borrowers. So that's something that we you know, we'll keep an eye out for, but that may be coming down the road. And I think with that, we conclude our presentation. Lisa, I don't know if there's time for questions or if we take them offline.
I'm going to ask just a quick ones, and then I'm going to put everybody to put them offline. But I will say this, the presentation was amazing. I actually totally understood this. So I thank you for that. We'll be calling on you again. I have 4 questions really quickly. Do I have to choose an 8-week versus 24-week period, or can I seek forgiveness at any point in between, let's say 12 weeks?
No, you have to, your covered period is 24 weeks, or if you receive your loan before June 5th, then you can elect 8 weeks. You can't choose 12 or something in between. So you have to enter it based on one of those 2 periods.
In the safe harbor, do you still have to file for forgiveness?
Yes.
What will happen if you have no payroll but pay by quick pay to your employees?
So you have to pay your workers as W-2 wages. So no matter how you sort of do it, but you only can include payroll costs that result in a W-2. So if you're paying workers and then issuing them 1099s, that doesn't count. And then I'm sure none of your listeners would ever do this, or none of the attendees would ever do this, but there are some businesses that may pay portions of the wages under the table, so to speak, and not report it on an IRS form. Those amounts also cannot be counted towards loan forgiveness.
Okay. The panelists presented a case in which the borrower spent less than 60%. What if the borrower incurred in more than 60% of payroll expenses? Will that help to a borrower?
Yeah, so you can have 100% of your forgiveness amount be payroll costs. There's no upper limit. There is kind of just the lower limit.
Okay. And so to keep the presentation moving, other questions we will share out. I will remind all the attendees that are still on that one-on-one consultations can be had with our panelists. Just email us at helpdesk@bronxchamber.org. I want to introduce Ralph from Bombaka, so I get it right, from TD Bank, who will then share out to introduce Marlene, who's the president of BOEDC, and TD Bank is a great partner of ours. Ralph?
Good morning, Lisa. Thank you. And on behalf of all my colleagues, I want to thank the Bronx Chamber, all the work that you're doing, and today's sponsor for inviting us to join this important conversation. I'm here to introduce Marlene Citron, a leader who I admire very much and have the opportunity to work with Marlene on the board of the Business Initiative Corporation. Many of you know Marlene throughout the Bronx, the city, and the state. Marlene has demonstrated time and time her deep skills of creating jobs, business opportunities, and revitalizing communities. Marlene, your guiding hand at BOEDC ensures capital is available to support many small businesses. and especially affordable housing and, like I said, the creation of jobs. Marlene, we look forward to your insight and advice as we navigate through these very challenging times. Everyone, welcome Marlene Citron. Back over to you, Lisa.
Good morning.
Okay.
Yes, we can hear you.
Hold on, I think I'm going to have to do something there. Can you hear me?
You're echoed. I think you have to
Yeah,
lower
turn
the
your phone
volume.
off, I think.
Yeah. No.
And now
You're
unmute
muted.
yourself. Now
Yeah.
unmute yourself, and I think you got it.
You're still muted.
Can you hear me now? What I'll do is can you hear me now?
Yes.
Okay. My apologies. Thank you, Ralph, for that amazing introduction. My little presentation is basically on a FYI for you. Want the businesses in the Bronx to know that we still have some business continuity funds available. We had set aside $1.2 million of state funds that had been made available to us in order to specifically address those businesses that, but for COVID, were profitable last year and would have continued to be profitable this year. It's important for us because of the fact that the Bronx has always had the highest unemployment rate to ensure that our small businesses continue to move forward. I say this obnoxiously time and time again, but it's important for everybody to understand the issues surrounding the Bronx, and that was that 10 years ago we were at 14.21% unemployment, the highest in New York State. In February we were down to 4.7%, and as of last month we're back up to 16%. So we need to ensure that our small businesses get all the support that you can. So having said that, if you are all interested or need, number one, funds to continue to move forward, we're available. We're here for anything as little as $10,000 and up to $100,000 in our business continuity loan fund. Our SBA 504 lender can go up to $5.5 million. And certainly if there are issues, and we're going to talk about that as well, where we can't help you financially because you don't fit in with our parameters, we're not dropping you. We're going to provide you, thanks to TD Bank, with the technical assistance that is needed in order to ensure that you become creditworthy. One of the saddest things that we discovered as we started making these loans available were the things that our smaller businesses did in order to start a business. They did really bad deals with their landlords. They had a great idea, they had a great venue, didn't have all the cash, and so they partner up with individuals that had the cash but had their own legal issues, and which they did not know about until we started pulling out credit analysis. And so certainly we're coming back with technical assistance. We're creating a list of things that we're going to be doing for our small businesses to help them with leases, to provide them with legal assistance, to provide them with insurance information, to explain to them that you don't start a business just to pay your rent. You start a business in order to really and truly make a profit and show a profit so that we're able to better help you to become even bigger. So certainly, if you need a loan, if you need technical assistance, thank you TD Bank for sponsoring us on this. Please reach out to us at mcintron@boedc.org. We will forward you over to the person, the right person on our staff that can help you out. Certainly Rafael Roger is one of those individuals, as is Pedro Barry and Michael Nixon. But send the request through me, and that way I can follow up and make sure that they're doing their job. We're here for you. We have a myriad of services at BOEDC that can help you, and we're going to come back really, really strong. We also, if any of the looted stores are online, we also worked with SBS in order to provide codes. I think we have 5 left for those stores that we can identify as having been looted and had not been assisted by the city of New York to receive a $10,000 grant. We're also providing those businesses with added funds if they're needed through BOEDC. So certainly we're here for you. Lisa, and to Michael, we are so delighted that we continue to be a collective unit here in the Bronx, because together we can move the Bronx forward faster. And to Arnold and Porter, you guys are amazing. Even I understood that as well, your presentation. and certainly we thank you and look forward to our future collaborations. Together, we can do great things. So thank you.
Thank you, Marlene. And you're 100% right. This team is incredible. Now we have added our amazing team of Arnold and Porter and the Yankees. And I will say that we are working on having this webinar in Spanish. I know that I had mentioned it with Arnold and Porter because Univision has been running so many ads and been running news shows with my cell phone. We're getting a lot of requests from some of our very small businesses, Spanish speaking. So we're working on that in the near future. We are also working with Arnold and Porter to do best practices to rehire and all these employee questions that are boggling everyone. But we won't keep everyone any longer. We ran a little over, but Arnold and Porter, Marlene, the Bronx Coalition team, Univision, and the Yankees, I can't thank you enough for joining our team, for representing our borough. And to Marlene's point, this is an incredible collaboration, and the Bronx is lucky to have all of you. So thank you again. Remember, one-on-one consults are definitely available through the help desk at Bronx Chamber. This presentation will be available to everyone and on our website. And you can always follow up with us if you need anything. Thank you again, everyone. Have a great day.